Top three things in Keith's macro notebook this morning are in this order: commodities, consumer discretionary, and volume. Starting off with commodities, the CRB index, which has 19 components, deflated another full 1% yesterday and remains bearish trend on our Hedgeye models. Energy stocks, XLY, down another 0.9% on the day. Commodity risk ranges have, by and large, all opened up to the downside, so signaling lower lows for oil, copper, and so on. Medium-term risk range for WTI crude is now 75.69 to 79.16. Second top pick in Keith's macro notebook this morning, consumer discretionary stocks, XLY. The popular view is that down oil equals up consumer stocks, but that just hasn't been happening. The discretionary ETF, XLY, was both down on a market up week last week and down on a market up day yesterday. By our math, two-thirds of the country is in a spending recession, which is a combination of no wage growth and a high cost of living, are pretty much the highest cost of living of all time. Third thing in Keith's macro notebook this morning is volume. Very similar dynamics to the September high in the U.S. stock market. S&P, on one level, the S&P made an all-time high while the Russell made lower highs on decelerating volume. We're definitely seeing that again. U.S. market volume, including dark pool, was down 8% for the month, and 8% versus last month, and 25% versus the year-to-date average. So, again, we've had a rally, V-bottom, but, the rally has really come off what we would consider less than enthusiastic volumes. And those are the top three things in Keith's macro notebook this morning.